TLT stock, of course, is the ETF for the 20 plus Treasury bonds. And I play TLT stock often. A lot of you guys follow my content because of my analysis on this. I trade it regularly. But there's another ETF, JNK stock, which stands for junk stocks, or junk bonds, actually. Junk bonds are high yield bonds for corporations with the future that we will see lower interest rates. JNK stock has been moving upward. Now, the nice thing about JNK stock is, should you buy now and hold for some period of time, and we actually do see interest rates moving lower, first off, you're looking at about 6.5% yield in a dividend from JNK stock as a stockholder, the ETF. Next, if we do see, say, the 10-year yield moving lower, there's an inverted price to yield relationship. JNK stock would move higher with yields moving lower. Now, the risk, of course, is these are junk bonds. You're trading an ETF based on junk bonds. And now the dividend history, and I've got the dividend history chart for you, is pretty consistent. So it gives you an idea as to what you could be buying into and getting those dividends. I like junk bonds a lot. I don't necessarily trade them too much, but this is one when you look at the yield you can get out of your dividends for holding this, and we see interest rates moving lower, JNK stock moves higher, so you're locking in pretty high yields and price would move higher. Let's jump in and I'll show you a few things on comparing TLT stock, of course, versus junk bonds, JNK stock. Let's jump in. If you're just finding my channel for the first time, thanks so much for stopping by. I'm an economist first and foremost, and I'm a value investor as well. I break down the economy and I show how economic indicators, how the economy is moving, would affect the stock market. I look at stocks, bonds, commodities, and individual stocks themselves. And in this case, we're looking at bond yields. This is the Spider Bloomberg High Yield Bond ETF. JNK is the symbol. Junk bonds. What are junk bonds? These are your not exactly AAA type companies who have debt. And so this ETF would buy a bunch of this debt. Now they're probably not pushing the envelope too terribly far with, wow, that's a company that's really teetering on the edge, because they don't want to see their ETF blow up because of that. So these are probably the higher quality junk bonds, but nonetheless still junk bonds. And junk bonds, the name itself sounds a bit risky, but they're not nearly necessarily graded as low as they are, meaning that this company's teetering on the edge, should be gone tomorrow kind of thing. Still, junk bonds. And they've diversified their portfolio of junk bonds that they're actually holding, or high yield bonds, the more apropos sort of investing terminology for it, but we call them junk bonds. And that's how they get their symbol, JNK. Now there is SJNK, which is another one, and yield on that is relatively the same, slightly higher, and I think they're slightly more junky. Slightly. Still, they don't want to see their ETF blow up. We can see price movements here. Price dropped all the way down to 88 for JNK stock, 93.90. I expect the 10-year to bounce a little bit. The 10-year, of course, popped up a little bit. Yield popped up a little bit today. I think the move lower in yield overall was a little too much off the heels of what the Federal Reserve stated. I'm not on board with the Federal Reserve. Normally, I give them their sort of nod, like, okay, that's what's happening with the economy. Great. I will play that way. The thing is, and I did a video over the weekend for those of you who might not have caught this, keep your eye on housing. As mortgage rates move lower, more people are going to push back into getting a house. We're seeing Housing starts popped up a little bit today. There was an economic report on that. Permits are moving a little bit higher as well. Not fantastically high, but nonetheless, we're seeing an increase in housing. If prices start to move back upward, the U.S. economy does not hit the 2% target inflation rate. Plain and simple math. So I'm not 100% on board with what the Federal Reserve stated just last week. Bottom line is this: if housing prices move back upward because of mortgage rates moving downward, which that's happening, the rate of growth will push housing prices too high, too fast, and we don't hit that 2% level. Keep that in mind. Let's take a look at some alternatives to JNK stock. U.S. 10-year Treasury yield 3.95 today. Popped back up. I know last week we saw a 3.88 print, and we saw a slight move higher. The 10-year did pop up a bit today and then sold off a little bit towards the end of the day. TLT stock dividend yield would get you 3.37%. Now, the safety of the TLT stock, of course, is that it is based on the 20-plus year Treasury yield. All right. But the stock dividend yield for JNK stock is 6.44%. So you're getting almost 2 times the yield. Sure, a bit more risk, a bit. And you would really see that risk when yields would be pushed really high. If yields turn back around and push upward significantly, JNK stock, of course, would move down sharply. But if that does happen, then it becomes a pretty decent buy. Then the question becomes, should you see yields then move lower, which is the goal of the Federal Reserve? You may have to sit on JNK stock for a period, but then eventually JNK stock flips and all of a sudden price goes up much higher. So you could lock in 6.44% today. Or you could wait to see if there's a dip and then just hold on to it, knowing that price would eventually exceed where you are. So it's kind of a long-term bet that, okay, we're in this sort of gray period with what will actually happen with interest rates. And because of that, what will happen in the future, you may have to wait on that. But nonetheless, the Federal Reserve eventually wants to lower interest rates, which would mean JNK stock would move up higher. In the meantime, you're sitting on 6.44%. You get monthly dividends. Check it out. But if we do see interest rates actually move lower over the course of, say, the next 6 months, JNK stock moves upward. So as a trade, you're sitting on a pretty decent move. As a sort of long-term investment with interest rates moving lower at 6.44%, given your dividend yield, you're doing okay. Here's a look at dividend growth history over the course of the last couple of years. Of course, 2020, we had COVID. Dividend history growth kind of moved downward. 2022, of course, we're moving back upward. In 2023, we're moving even further higher with the 644. I think 601 is the actual dividend. You get about 50 cents per month. 12 months, $6. Some of those months, check out the dividend history on those for the individual months, but mostly roughly averaging 50 cents. Here's a look at the high yield bond. This is another look at the daily on this. If you go way back in 2020, all the way over to the left-hand side of the chart, you can see that March, and I wanted to kind of start right there with this particular chart. There was a pretty big move higher with the interest rate moves lower. Now, how much can we recover? I don't know that we'd see 100. But if you were able to buy in at, say, between 90 and 92, if things sort of moderate out a little bit, you might be able to get out at 96 to 98. And you probably do so in about a 6-month period of time. Keep junk bonds on your mind, JNK stock. I'm probably going to bring this in a little more often versus TLT stock. I know I do a lot of content with TLT stock. I try to put something out on a weekly basis. I know a lot of individuals really like my content on TLT stock, but I'm also going to bring in JNK stock, probably talk about SJNK, and there's another one that had a yield differential that was slightly higher as well. And they also had about 80% more assets under management. I'll probably bring that in on a weekly basis and put out some content, kind of keep this up to date. Again, however, I'm not on board with the future of the Federal Reserve lowering interest rates next year yet. I think we'll probably see price on JNK stock moving a bit lower, but then you'd want to get in and stay in for a long period. You'll probably see some profits on that. Make sure to hit that like and follow button, and I'll see you in the next video.